Now that the price of oil has rallied to $65 a barrel, what do you do with the refiners, one of our favorite segments? Take Marathon Petroleum, MPC, our favorite in the group. This is a stock that has roared up more than 30% last year, with much of that run fueled by the two big hurricanes that knocked out so much refining capacity on the Gulf Coast. When refineries shut down, the price of gasoline and other refined products goes up. Marathon made a lot of money, but it's making a lot of money with or without hurricanes. For the last week, this stock has been drifting lower, though. And then there's today, perplexing action, frankly. This morning, Marathon Petroleum delivered a 6-cent earnings beat off a 99-cent basis, much higher than expected revenues, up nearly 23% year over year. Management's commentary 2018 I thought was tremendously bullish, but the stock got dinged 1%. Maybe it's not. Maybe this is just the opportunity we've been waiting for. Maybe it's just profit taking. Let's take a close look with Gary Heminger. He's the chairman and CEO of Marathon Petroleum Corp. To hear more about the quarter and where his company's headed, Mr. Heminger, welcome back to Mad Money.
Thank you, Jim. Thanks for having me
Thank you,
again.
Gary. Gary, this is a remarkable quarter, remarkable time for your company. And a lot of people feel that the refining has been boom, bust, boom, bust. You've completely proven that wrong. What are you doing different to defy what had been cyclical and really got a secular growth story going here?
Well, one of the things, Jim, is we have tremendous flexibility in our refining system. We can run 70% sweet barrels, or 70% medium, sour, and heavy barrels. So we'll take advantage of whatever alternatives are available in the marketplace. And the other thing that really culminated today, and I was on your program here about 14 months ago, but today we executed the last part of our big strategic study, where we dropped down another $1 billion worth of assets into our midstream today, as well as culminated the IDR exchange, whereby MPC is going to take back shares and trade for all the incentive distribution rights that we have within MPLX.
Which makes it so that anybody who buys the Master Limited Partnership obviously does much better. At the same time, you're very bullish in the midstream, as you said on the call.
I am, Jim, and when you look at MPLX, what we've been able to accomplish, from this point forward, all of our organic growth, we're going to do without issuing equity. We can do it inside.
Which is so good. These guys issue a lot of equity. It's really killing people.
Right. We have tremendous flexibility. Our net debt to is down to 3.6 times. We have 1.28 coverage at the end of the year. So we're in really good shape, and we've announced and guiding the market, we're going to have a 10% distribution increase in 2018. So we're running on all cylinders within MPLX.
I always feel it's a shame people don't realize a lot of these companies have stopped increasing their distributions. 10% is by far the highest of any I follow. Let's talk about the stores.
Okay.
There had been some agitation that maybe the stores should go. I look at the stores. You're making a lot of money on these.
We are, Jim, and that's another segment. Speedway had its sixth consecutive year of increasing income, second year in a row of EBITDA over $1 billion. And we did a comprehensive study on Speedway last year and determined, unanimous approval by the board, that remaining integrated and having the stores inside of MPC, where we have almost 70% what we call assured volume. We know every day, we now refine around 2 million barrels per day. I know every day we're about 65 to 70% of that gasoline is going to be sold tomorrow.
And very few have that control. At the same time, then tell us about all the gasoline that you're able to export, because we have so much here.
Right, and that's been really, I think, one of the most important fundamentals of the refining industry over the last 5-6 years. In the quarter that we announced today, we exported 314,000 barrels per day in the fourth quarter.
Okay.
Exported. That's about 17% of what we make.
Okay.
So that is very important to be able to hit the foreign markets. And when you look at the demand on a global basis, we're expecting 2018 globally to be up about 1.5 million barrels per day. That's going to require more and more exports from the U.S. And the U.S. Gulf Coast refineries, they're the best engines in the world.
Now, we have a change of president who is very pro-deregulation.
Right.
And very pro-oil and gas, let's just call it that. What does it mean for the CEO of a refiner to have what I have to regard as a friend in the White House?
Right, and I've met with the president. He was in Cincinnati giving a speech on infrastructure. And his questions were, are we doing better on permitting? Not permitting for just pipelines, but permitting and refining, building terminals, and pipelines as well. And that's very important. The infrastructure bill that in his State of the Union address that he talked about, it's very important that we continue to be able to build new pipelines. we need a lot of work and a lot of investment in the rivers, both the Mississippi and the Ohio River. They need infrastructure investment. So the president and the administrator of the EPA, Scott Pruitt, are both very pro the energy industry.
Okay, now one of the things that people were talking about as price of oil went up a little bit is some say that because of refining constraints, that gasoline could go to $4 a gallon in California this summer. That seems impossible to me.
Well, we don't market in California.
That's not your market.
We don't market there, but let me give you a little backdrop there. If you look at a days of supply basis, including exports, both gasoline and diesel, we're at the lowest inventory levels. Gasoline since 2006, diesel since 2013. So inventories have really come down. We're in the best position from a refining industry standpoint in many, many years. If you go back to 15 and 16, very high inventories coming out of the fourth quarter. This year, inventories are in check, as well as crude oil inventories are in very good shape in the U.S. So I think that's very bullish for where we see crack spreads going in the refining system.
How much they make off of oil.
Right. And demand ended up, you know, as we were here a year or so ago, expectations demand would be off 0.5% to maybe 1%. And demand ended up in the positive position last year.
All right, one last question. A lot of people tell me, you know what, Jim, fossil fuels, just a matter of time. They're going away, and we're all going to be using electric cars. I mean, what's the realistic view?
Well, it's the facts are in the marketplace and what the consumer wants. Consumers still buying SUVs, vans, and I think the transportation in the future is still going to be the internal combustion engine. And why? It's the cheapest form of transportation.
Well, that matters, and that's why you're here to stay. And you've done a remarkable thing. You have managed to create a company that even very tough activists have had to say this is the right strategy and the right style. That's Gary Heminger. He's chairman and CEO of Marathon Petroleum MPC, which is the best refiner and a great exporter and a terrific retailer. Mad Money is back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.